Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
Today we're diving into some exciting developments in the world of finance and credit. First up, we'll discuss how Suryodaya Small Finance Bank has found that 90% of credit extended to UPI borrowers are prime borrowers, highlighting the rise of what they're calling sachet credit. Then we'll cover Titan Company's recent redemption of rupees 400 crore worth of commercial papers, a move that reflects important shifts in corporate debt management. And finally, we'll look at Selim Erode Investments' approval of a rupees 1.5 crore NCD fundraise, an intriguing development for investors and the market alike. There's plenty to unpack today, so let's get started on these key topics shaping the debt and investment landscape.
Absolutely, Vijendra. Suryodaya Small Finance Bank's credit line on UPI shows that nearly 90% of borrowers have CIBIL scores above 725, indicating strong prime and near prime borrower quality. The average utilized ticket size is approximately 7,000 rupees, despite limits up to 60,000 rupees, signaling a rise in sachet credit.
That's significant, Leila. It means embedded credit is not just for subprime segments, but attracting quality borrowers using small ticket credit for everyday spending, like groceries and fuel. This aligns with the rapid growth in UPI transactions and low credit card penetration, showing vast potential for formal digital credit. The portfolio has grown quickly, with sanctioned limits crossing rupees 362 crores and utilized limits exceeding rupees 102 crores in under 8 months. The monthly growth rate is about 63%, showing strong consumer acceptance and scalability.
And geographically, North and West India lead adoption, especially cities like Jaipur and Delhi NCR. Over 97% of these customers are new to the bank, making CLOU a powerful acquisition tool while maintaining disciplined underwriting and portfolio health.
Let's move on to our next article. Titan Company Limited has fully redeemed commercial papers worth rupees 400 crores on June 22, 2026, originally issued on May 27, 2026.
This redemption complies with the Securities and Exchange Board of India's August 10, 2021 regulations, ensuring proper transparency by notifying the stock exchange and updating investors. Such consistent stock performance alongside disciplined debt management reflects positively on Titan's market reputation and financial stability.
Notably, Titan's stock has gained over 10.25% in 6 months and an impressive 146.85% over 5 years, showing strong investor confidence. Let's look at another key development. Selim Erode Investments Limited is raising rupees 1.5 crore via 15,000 secured non-convertible debentures. These have tenures of 3 years and 5 years, with interest rates up to 12.00% per annum, fully secured against current assets excluding fixed assets.
The secured nature and asset backing provide strong security for investors. Given the company's volatile stock, with nearly 10% decline in 1 day, but long-term growth of 778.86% over 5 years, these NCDs offer a stable income alternative. Market volatility makes these secured debentures attractive for risk-averse investors seeking steady returns.
The 3-year option offers monthly interest payments and a cumulative scheme, while the 5-year tenure aims to double investment at maturity. Investors can exercise put options in the shorter tenure, but with reduced interest, and redemption happens only at maturity otherwise. The appointment of Vistra ITCL India Limited as debenture trustee ensures a minimum security cover of 100% on outstanding balances, enhancing investor confidence.
Let's look at another key development. Indian financial firms plan to raise $1.5 billion through bond issuances this week, driven by a new, cheaper hedging mechanism. Power Finance Corporation aims for $500 million at a yield spread tightening from 130 to around 100 basis points over US Treasuries.
This is significant as the new forex swap facility has stabilized the rupee, encouraging both bank and non-bank lenders to tap the dollar bond market, which had limited issuance recently. Demand should be strong given this improved hedging environment.
Bank of Baroda targets $500 million via 5-year dollar bonds, while private sector Axis Bank plans at least $500 million in perpetual bonds. Both may expand issuance if market conditions stay favorable. Following HDFC Bank's successful $750 million bond at 90 basis points spread, these deals reflect rising confidence in foreign currency borrowing supported by recent policy measures.
Alongside these developments, Indian financial firms are finalizing pricing for about $1.5 billion in offshore bonds this week. Driven by the Reserve Bank of India's new 1.5% fixed-rate foreign exchange swap facility that lowers hedging costs, this cheaper hedging facility is boosting demand, making it more affordable for Indian lenders to issue dollar bonds, which were previously less frequent due to higher costs and currency risks.
Power Finance Corporation targets a $500 million bond with spreads tightening from 130 to around 100 basis points over US Treasuries, marking the first non-bank lender to tap this facility. Alongside PFC, Bank of Baroda and Axis Bank plan substantial dollar bond issuances, signaling strong market appetite and a strategic shift to leverage RBI's swap facility amid global uncertainty.
Let's look at another key development. The Reserve Bank of India governor stressed digital public infrastructure is key for MSME credit growth. Platforms like the Unified Lending Interface and Account Aggregator have enabled banks to extend formal credit worth Rs 36.79 trillion as of December 2025.
That scale is impressive. The Unified Lending Interface, by consolidating GST returns and bank statements on a single platform, simplifies credit assessment, especially for MSMEs with limited credit history. This could drive more inclusive lending and reduce evaluation friction in the market. Despite a 15% compound annual growth rate over 5 years, the governor noted the MSME credit gap persists. It shows the sector's financing needs are still only partially met, highlighting the importance of blending relationship-based lending with technology-driven credit systems.
Absolutely, with MSMEs contributing 31% to GDP and employing over 320 million people, enhancing digital credit delivery can unlock significant economic benefits and support sustainable growth for India's vast MSME ecosystem.
The Reserve Bank of India governor emphasized digital public infrastructure to enhance credit for micro, small, and medium enterprises. Platforms like the Unified Lending Interface and Account Aggregator are key to faster, data-driven credit assessment, supporting over 36 trillion rupees in outstanding MSME loans as of December 2025. The account aggregator framework alone enabled lending worth 3.5 trillion rupees in fiscal year 2025 to 2026. Despite a 15% compound annual growth rate in MSME credit over 5 years, the governor acknowledged that the credit gap persists, signaling unmet financing needs. RBI's integration of technology with government schemes like Mudra and the Credit Guarantee Fund is vital to closing this gap. Viewing MSMEs as long-term partners rather than compliance targets could unlock sustained economic benefits and broader financial inclusion.
Let's move on to our next article. Embassy Office Parks Real Estate Investment Trust raised Rs 7 crores through a 3-year bond issue with a fixed coupon rate of 7.49% per annum, payable quarterly. The bonds hold a AAA rating from CRISIL and CARE, indicating strong credit quality. On the same day, Indian Renewable Energy Development Agency raised Rs 15 crores via a 3-year and 6-day bond at 7.34% per annum, also rated AAA by ICRA and India Ratings, showing robust demand for top-rated bonds.
These simultaneous high-quality issuances highlight solid market appetite for safe, medium-term debt, indicating stable investor sentiment towards infrastructure and renewable sectors in India. IREDA raised Rs 15 crores through a bond issue maturing in 3 years and 6 days, offering a coupon rate of 7.34% per annum. The issue attracted strong demand, reflecting confidence in renewable energy financing. The AAA rating from ICRA and India Ratings signals very low default risk, making these bonds highly attractive for institutional investors seeking safety and steady returns in a growing green energy market.
The issue size includes the base amount and any greenshoe options, showing flexibility. This aligns well with IREDA's goal to meet medium-term funding needs while supporting sustainable energy growth. This bond issue highlights increasing investor appetite for renewable energy debt, encouraged by government policies and the sector's rising importance within India's financial landscape.
Moving to our next story, SEBI's Garuda system replaces the old 30-day pre-clearance with a fast-track, disclosure-based model. Angel and accredited investor-only funds can start immediately after filing an acknowledgement, cutting out merchant banker certification completely. Regular schemes get their approvals in 10 working days, a big cut from before, while large value funds keep their existing fast-track waivers. CEOs and compliance officers now self-certify compliance, shifting accountability internally.
This change speeds fund deployment and lowers compliance costs, crucial for India's growing private wealth scene. It lets experienced investors enter faster while keeping market integrity through stronger post-launch checks. Overall, Garuda balances rapid capital flow with investor protection, encouraging startup growth by reducing bottlenecks without compromising disclosure accuracy.
Moving to our next story, S&P Global has assigned a BBB long-term rating to Bank of Baroda's proposed US dollar senior unsecured notes issued via their Gift City branch. This matches the bank's current credit rating and supports their $4 billion medium-term note program. The rating is provisional, pending final review of the note terms. Investors should watch for confirmation and details on size and pricing.
This rating signals stable credit quality and helps attract international investors, reinforcing the bank's strategy to manage foreign currency liabilities through global capital markets. The main risk remains the general credit risk of Bank of Baroda, similar to other Indian public sector banks with comparable investment grade ratings. CRISIL rated RBL Bank's fixed deposits at AAA stable after Emirates NBD infused 26,016 crore rupees, raising the capital adequacy ratio to 35.32% by March 2026. Asset quality improved with gross non-performing assets down to 1.5%, but concerns remain in unsecured loans like microfinance. Profitability is modest, with return on assets around 0.5%.
Investors will watch how RBL manages unsecured loan risks and gains operational efficiency from integrating Emirates NBD's India branches to improve earnings going forward. Nitin Spinner's long-term credit rating was upgraded from CARE A with positive outlook to CARE A Plus with stable outlook, reflecting stronger financial stability for the fiscal year ending March 2026. Their long-term debt includes 1,621.71 crores in term loans and 750 crores in fund-based limits, with crores in fund-based limits, with repayments extending to the year 2035. Market participants should watch quarterly results closely to ensure performance sustainability and prudent debt servicing, as this rating upgrade marks a significant credit profile enhancement in the textile sector.
Now let's discuss another important development. Godrej Industries raised Rs 10 billion through separately transferable redeemable principal part bonds, split evenly into two tranches maturing in 5 years and 3 months and 5 years and 6 months, both carrying an 8.23% coupon. India Infradebt Limited raised Rs 11.15 billion through a 5 years and 6 months bond at a 7.92% coupon, rated AAA by ICRA and CRISIL. LIC Housing Finance is launching a bond issue to raise up to Rs 35 crores, including a greenshoe option of Rs 25 crores. Ujas Energy plans to raise its borrowing limit to Rs 1,000 crores at the AGM on July 14, 26. Bajaj Finance plans to raise Rs 20 crores through a 5-year bond issue, with a greenshoe option of Rs 10 crores. Credit agencies, CRISIL and ICRA reaffirmed Mindspace Business Parks REIT's highest ratings at AAA stable and A1+. By 2036, 600 million people, or 40% of the population, will live in cities, which will generate 80% of national GDP by 2050. SEBI's reforms aim to address municipal financing challenges by allowing municipal bonds to refinance debt, expanding the investor base, and enabling pooled financing for smaller municipalities. Strengthening institutional capacity and promoting municipal green bonds could mobilize up to $2.5 billion by 2030. And with that, we wrap up today's key developments shaping India's debt, credit, and investment landscape.